Good afternoon, everyone. This is Anthony Alaka with Torrey Hills Capital, and welcome to the FPX Nickel webcast for February 16th, 2023. Hope everyone's doing well, and thanks for taking the time today to join our virtual lunch. We are very excited to bring you FPX Nickel. They are a Vancouver-based junior nickel mining company developing the large-scale Dakar Nickel District in central British Columbia. Company's initial target, Baptiste, has shown potential to be one of the best large-scale, low-cost nickel projects in the world. A company is set to publish a pre-feasibility study later this year, which we feel will further back up the robust economics of Baptiste. And there's also an opportunity to further expand the property, as Martin will talk about during the presentation. FPX Nickel trades on the OTC under the ticker FPOCF and on the TSX Venture under the ticker FPX. Currently trading with a market cap of only about $80 million US, with a robust demand for nickel expected to continue and several important investment catalysts expected in 2023. We feel that there is plenty of upside in the stock as the company continues to execute its strategy. With us today to discuss FPX Nickel's operations and growth strategy going forward is the company's, President and CEO, Martine Turenne. Martin, it's great to have you on today, and I'm really looking forward to having you update our viewers today on the progress that is being made at Baptiste, and I'm excited for you to share all the other developments happening with our group. But before we get started, I just want to mention, if our viewers have any questions during the presentation, simply type them into the Q&A box or the chat box, and we'll make sure that your questions get answered. So with that said, I'm going to turn it over to Martine Turenne. Martin, the floor is yours.
Great. Thanks, Anthony, and greetings to everyone on the line. Thanks a lot for joining, taking time out of your day to hear me speak about FPX. So I'm coming to you today from Vancouver. As Anthony mentioned, that's where our company is based, and our project is also in British Columbia. So this is a real made in Canada, made in North America nickel story, one that's really focused on developing a very large-scale project that is capable of producing nickel at a very low cost, with a very low carbon footprint from a friendly source that we think will ultimately support the EV battery industry in the United States and in Canada and North America more broadly. So happy to talk to you about that and introduce the story to you today. Before we get going, I would point people to the typical forward-looking statements. I will be making forward-looking statements during today's presentation. Please do refer to this slide deck on our website and review these statements or this disclaimer carefully. All right, before we get into the company itself, I thought it might be useful to talk a little bit about nickel, why people should care about nickel today, and why we think they're going to care a lot more about it going forward. First of all, what is nickel used for? And these sort of pie charts on this screen kind of present that. In 2020, you can see that about 69% of nickel demand was for the production of stainless steel. That's the blue part of the pie. And so this has been the traditional sort of backstop and the main engine of nickel demand worldwide. Stainless steel has applications around your home, I'm sure, cutlery, appliances, that sort of thing. It's also widely used in hospitals, of course, and a lot of different industrial settings. Stainless steel rebar for bridges and wharves, stainless steel tankage for storage of chemicals and transport of chemicals. So both an industrial and a consumer application to stainless use. And as the developing world goes up the development curve, and as people in places like India and China develop more wealth, they tend to consume more stainless per capita than they would have when they even 10 or 20 years ago. But their stainless consumption per capita is still much lower than it is in the Western world. So stainless demand growth is expected to continue to be very strong as the rest of the world sort of catches up to Western standards. But what you can see here in the most rapidly growing slice of this pie over time is for the use of nickel in electric vehicle batteries. So you can see in the year 2020, EV battery consumption comprised around 6% of total nickel demand. By 2030, it's projected to account for about 26%, and by 2040 for about 36%. So you effectively have a brand new source of demand coming for nickel now that effectively didn't exist 5 or 6 years ago. Prior to EVs, nickel use in batteries was very minimal, used somewhat in cell phones and other electronics. But the EV battery demand has now become sort of the engine of nickel demand growth going forward, really hand in hand with that continued demand growth from stainless steel. So this is an important kind of topic to keep in mind. Now, one of the interesting things that I like to sort of pose to people in the context of this is, given all that nickel demand that we see going forward, and the need for sort of energy security or independence and redomestication of global supply chains, I'd like to kind of see, for anyone on the line, can anyone kind of hazard a guess as to what percentage of total nickel supply the United States accounts for? So all the nickel production in the world, what percentage of it comes out of the United States?
Yeah, if you have an answer to that or a guess, throw it out there in the Q&A or chat. So what percentage of nickel do you think is made in the US? Martin asked me this question a few weeks back. Hold on, we got one. 8%.
All right. Well, let's call that the final answer.
Okay.
Or if anyone wants to call a friend on this one, now's the time. But
7% we got.
7%. Oh, this is going to be like The Price is Right. The answer is less than 1%. So the United States is effectively not on the map when it comes to nickel production currently. Of course, the United States wants to build a domestic sort of supply chain of nickel and other critical materials that would go into electric vehicles. Canada is now considered to be a domestic source of nickel for the purposes of the U.S. Department of Defense. And the reason for that is that most of the nickel reserves in North America are in Canada. And so we're really kind of collaborating here. These two countries are going to be collaborating very closely going forward on growing nickel supply to meet that growing need, to build out industry in the U.S. and also for energy security and independence. That's particularly important because as of today, two countries account for the lion's share of nickel production globally. Close to 70% of current nickel supply is controlled by two countries. And I wonder, again, just to put it out there to the audience, can people think about what two countries control 70% of global nickel supply?
Yeah, and when Martin told me this, I was pretty shocked. To give you a hint, it's probably not a good thing that these two countries handle most of it. But Russia,
that's one of them. Yeah.
China and Russia. Yeah. So
that's China and Russia indeed. So, the energy security issues around transitioning to EVs when you're reliant on nickel and cobalt that is coming from those problematic countries is should be apparent. And so that's where we think there's real strategic benefit for FPX having its project in Canada. Digging a bit deeper into sort of projections for nickel demand growth, I really like this slide. It leverages off some data that has been put out in the market by Glencore, obviously one of the largest mining companies in the world. And what Glencore did here is they compared 2019 demand for a variety of metals, for copper, zinc, nickel, and cobalt. Those are the light blue bars that you see here. And then they contrasted that to what they envisioned to be the 2050 demand level for these various commodities. And what you can see is that copper demand is expected to increase by a factor of around 2. The same is true with zinc. However, for nickel, you see that demand growth will be almost 4 times. So the transition, the low carbon transition, the energy transition, the transition to electric vehicles really disproportionately benefits nickel and nickel demand. And in light of those sort of geopolitical considerations that I mentioned earlier, it really is important to start thinking about where the next generation of nickel supply is going to come from. And that's where we think FPX fits into the story.
Hey, Martin, has the war in Russia impacted nickel prices?
Yeah, it has. It had a significant impact, particularly early on. Nickel, or Russia rather, is as I mentioned, a very large producer of nickel globally. A lot of consumers are basically saying that they won't accept Russian nickel in their supply chains. You can imagine that European and US automakers would be leery to do that. So one, it's had a big impact on the nickel price because some of that supply has been somewhat threatened by the conflict there in the Ukraine. And also what we're seeing is this growing trend now, and it's something that we see as a company, with FPX when we're talking to car companies and battery companies, is those consumers are very focused on this idea of traceability of the metal. They want to know where the metal that is going in their batteries, they want to know exactly where it's coming from. What countries has it touched or not touched? And to the extent that it has touched Russia and China, that's going to be very problematic for them, because the EV subsidies in the United States are really premised on getting that supply of those raw materials from free trade allies and from friendly countries. And obviously Russia and China doesn't come into that. So what we envision going forward is there will be probably differential pricing based on the traceability and the source of products, meaning that if you're producing, clean green nickel from the United States or from Canada, you will see a premium price for that product versus, let's say, if you were producing that material in China or Russia. And I think that traceability, that sourcing theme is a really important one.
Yeah, it's an excellent point. Thank you.
Now, just having a quick look here on nickel price historically, really dating back to the year 2006, and the nickel price is tracking here on the blue line that you see. And this is the average annual price, so it doesn't account for sort of intra-year volatility. But what you can see quite quickly is that the nickel price has had quite a significant range going back over the last 15, 16 years now. It had a high average price of around, in the range of $18 a pound back in 2006 and 7. That went down to almost $4 a pound after a period of significant oversupply in the market. And over the last few years, we've been slowly working our way up. Today's nickel price is around $12 a pound. So we're still well below the all-time historical high, but we have been moving in a positive direction. And what we see is that analysts are projecting that there will continue to be significant deficits of nickel supply going forward. Those deficits are expected to get even larger as you go out into the last half of the 2020s. So that should continue to be very supportive of strong nickel pricing. At the end of the day, the world needs to start building new nickel mines. And that's really where I think I can transition into the FPX story more specifically. All right, so FPX, our main focus is on a project called Baptiste. As I mentioned earlier, that's located in British Columbia, Canada. We're currently completing a preliminary feasibility study on the project, so it's very well advanced, very well understood geologically. There's very low geological risk here. This is more about engineering, permitting, and ultimately building a mine here, which we would hope to have a mine that could potentially be in production, before the end of this decade. The Baptiste deposit is one of the world's largest undeveloped nickel deposits. It's one of the top 5 largest undeveloped nickel deposits in the world. There's over 10 billion pounds of nickel contained in the deposit here. The nickel price today, as I mentioned earlier, is around $12 a pound. So the in-situ metal value here is significant. We completed a scoping study or preliminary economic assessment in 2020. Suggested this would be one of the largest annual producers of nickel, around 100 million pounds of nickel per annum, would make it one of the 10 largest nickel mines, have a very long mine life, around 35 years, produce for a very low cost, under $3 US a pound, and also be viewed as sort of a green choice for nickel, particularly with respect to the low carbon intensity of nickel production, which again is very important as a strategic differentiator. And I'll touch more on that here in a few slides. So really this is the focus of the company, advancing Baptiste ultimately to a construction decision in the coming years. Given the scale, size, and attractive cost and attractive jurisdiction of the asset, we ultimately think that this will sit in the hands of a much larger company, of a major company. And so for shareholders, that would be the ultimate exit point, would be a takeout by a major company. And some of the news that we put out in recent months has started to show that big sort of strategic interest in this project, and I'll touch on that in a little bit as well. Okay, just to give everyone a sense where we are within the North American context, the Baptiste project is here in central British Columbia, and the icons that you see here is through the Southwest into Texas and then into the eastern part of the country. These are all battery plants that are either currently operational or that have been announced. We've seen the large automakers, Ford, GM, collaborating with, Japanese and Korean battery companies to develop the next generation of battery plants in the United States. Those plants typically cost several billions of dollars a piece to build. They're going to be very hungry for metal feed. The big question is, where is that metal going to come from? And, as I said earlier, given that need for sort of domestic or North American supply, we think the Baptiste project is uniquely well positioned to deliver into that market. Zooming in now on the province of British Columbia, you can see Baptiste sits within an area we call the Dakar Nickel District. So this is a district that we think is ultimately going to host several world-class nickel deposits. Baptiste is the most advanced of those. We're really in quite a good area of the province. There is a large existing mining operation called Mount Milligan, about 50 miles away from us to the east. A very similar scale of operation to what we have envisioned at Baptiste. We also like to point to the Blackwater project. This is an advanced stage gold project that is awaiting its final permits now from both the federal and provincial government. We think when Blackwater gets those permits here over the next few months, that will set a very strong precedent for the permittability of these types of projects going forward. For us, that really runs through our relationship with local First Nations or Indigenous people. Our project sits on the traditional and unceded territories of the Claston Nation and the Binche-Wuten First Nations. We work very hard to earn the trust and collaboration from those nations with our work programs each and every day, and really look at developing long-term partnerships where, the development of this mine would really benefit those communities first and foremost. Just wanted to give everyone a bit of a satellite view here of the project. And this is a view that is available on our website for people who want to kind of play with this and look at the landscape in a bit more detail. As I said, the land package at Dakar covers a very large area here, covers 245 square kilometers, a very vast area. Baptiste is the most advanced of the deposits within the footprint here in the foreground. We can see Baptiste, and that will be the subject of most of our conversation today. As I mentioned, that is one of the largest undeveloped nickel deposits in the world. However, in recent years, over the last two field seasons of drilling, we've identified a major new nickel deposit at what we call the Van target, which is located about 4 miles north of Baptiste. So within the same land package, we now have another world-class scale nickel deposit. And so where we envision a mine life of about 30 plus years from the Baptiste deposit, we envision that the Van target could ultimately add further scale to that, so that this could ultimately be an area that becomes one of the engines of global nickel growth. There are certain places in certain countries that are known for that currently. The areas in northern Russia and Siberia, areas in Indonesia, in Asia, of course, in the Philippines, and in Canada. The engine of nickel growth typically has been in Sudbury in Ontario. We have the type of growing nickel endowment here where we think ultimately this Dakar area will be held in the same regard in terms of being one of the key hubs of nickel supply globally. One of the more recent pieces of news that we put out in the fourth quarter of last year was an updated mineral resource estimate for Baptiste. You could see here, this is a very large open pit style deposit with a very low strip ratio. The starter pit area really targets a higher grade portion of the deposit. This is generally across the deposit a relatively low grade deposit, but one that, given sufficient economies of scale, the economics have shown can be a very high margin producer. That resource estimate that we put out in 2022 was based on, extensive drilling we've done of the project. You can see here that we've defined a resource that is over 2 billion tons of size. So it covers an area that laterally is, just to put this in people's sort of in their mind's eye, the lateral extent of mineralization at surface and at depth represents an area that's actually a bit larger than rather Central Park in Manhattan. So if you think about Central Park, imagine Central Park was a nickel deposit in terms of the length and the width of it. That's about what our deposit looks like. In terms of the vertical depths of drilling and where we're still hitting mineralization, we're hitting mineralization at depths of 500 plus meters. That's approximately the height of the Empire State Building. So if you think about a sort of a big chunk of mineralization that has the area, the lateral footprint of Central Park, and the vertical depth from surface down to the height of the Empire State Building, you can just think for a second about the kind of the massive scale that entails. Now, the nickel mineralization here, as I mentioned, is relatively low grade, but what really makes it and unlocks the economics of this and makes this a potentially very high margin producer is the fact that the nickel is hosted in a bit of a different nickel mineral than is typical. The nickel mineralization in most nickel deposits in Canada and in places like Russia is in a mineral called a sulfide mineral. In places like Indonesia and the Philippines, the nickel is hosted in laterite form. This style of nickel mineralization that we have at FPX is neither. The nickel here is hosted in a mineral called awaroite. Now, awaroite is a pure alloy of nickel and iron. There's no sulfur in the mineral itself and very little sulfur in the background rock matrix. And what that allows us to do by having this very clean mineral that is deficient in sulfur and that is also highly magnetic, it allows us to recover this awaroite using a very simple flow sheet and one that allows us to very quickly upgrade that relatively low grade feed to a very high grade, very clean premium product using very conventional technologies, and ultimately one that yields low costs and a highly sort of attractive product. I'll quickly walk through what that flow sheet or what that metallurgical process looks like. So what we envision in the PEA and in the preliminary feasibility study that I said is upcoming here in September is relatively large amount of feed. So 120,000 tons per day of material that's grading approximately 0.22% nickel. From there, we crush and grind that material and we put it through 2 stages of magnetic separation. And after those 2 stages of magnetic separation, where we're really leveraging that magnetic quality of the awaroite mineral, we can reject about 95% of tailings, 95% of the rock rather, to tailings. So effectively rejecting it as waste through a very benign, very simple process of using large industrial magnets to separate the magnetic materials from the non-magnetic material in the rock. At that point, we now are producing only 6,000 tons per day, so a very small footprint of production of now 2.5% nickel. So this would be viewed as a very high grade feed. This then goes into flotation, and from there we produce a very high nickel content concentrate. The awaroite nickel concentrate grades typically in the range of 60 to 65% nickel. Okay, most nickel concentrates coming out of sulfide deposits from places like Russia and Sudbury here in Canada, the nickel grade of those concentrates is around 10 to 12% typically. So our nickel concentrate is about 5 to 6 times the nickel content, and that's due to the inherent properties of this awaroite mineral itself.
Now, is that part of the pilot test work you just did and announced?
That's correct. So because this is a bit of a novel mineral, this awaroite mineral, no one has ever discovered a deposit quite like this. There's been many years now of metallurgical test work in the laboratory that we put into developing this flow sheet and showing that this very simple flow sheet works. So after several years of doing that at the bench or the lab scale, we recently completed a pilot plant. So that's where we treated just under 20 tons of material through a pilot plant. And that pilot plant basically approximates more closely what a commercial operation would look like. So it's a significant scale up in the tonnage of material that you would typically see tested at a laboratory scale. So in that scale up to the pilot plant, what we saw is that this flow sheet has been demonstrated to work very well, achieve very high recoveries, and produce the types of products that we're talking about here. So that pilot plant, we put out a news release in January describing the results of that work. And, you know, this is the type of work that you would more normally see at a much later stage project, more at a feasibility stage. We felt it best to do it right now ahead of a preliminary feasibility study. And we think that it's a bit of a mic drop, frankly. It really definitively, in our view, kind of confirms this flow sheet will work and really starts to approximate what a commercial operation would in fact look like.
Yeah, so you know it works, and then it can be built to scale to what you need pretty quickly, or?
You know, we'll actually have a larger scale pilot demonstration that will run this year.
Mm-hmm.
That will only further, I think, confirm and provide data that confirms that this flow sheet is very robust. And from there, it's going to set the basis for what, you know, the parameters of a feasibility study would look like for the eventual construction of the project.
Great, thank you.
Now, the great advantage of this style of nickel mineralization is it gives rise to this very high grade concentrate. Again, this concentrate grading around 60% nickel, whereas other concentrates are more typically in the range of 10 to 12% nickel. The other thing that really differentiates this product is that it contains very low levels of sulfur and other deleterious elements. These are things like arsenic, antimony, mercury, selenium. These are undesirable elements that to have in a concentrate. Now, in a nickel sulfide concentrate, they're typically there in fairly high concentrations because they're associated with sulfur. Here, the absence of sulfur in the host rock means that the product we produce is very, very clean. So high nickel content, very clean. And that what that allows us to do is to bypass smelting altogether. Most metal products, concentrates, need to go to a smelter. The smelter is this sort of middleman that sits between the mining company and the end consumer. The smelter, you know, ends up taking a lot of the profit out of that sort of supply chain because you can't get around it. With most nickel sulfide concentrates, that material needs to go to the smelter. So the smelter exacts a heavy penalty on the mining company. In our case, we don't have to deal with smelters. We can go directly to end consumers in both of those main markets that I mentioned earlier, either the stainless steel side or the battery side. And I'll talk more about these in a moment. What that means is we can get paid a lot more for our nickel units because we can successfully cut out that middleman in that supply chain.
And how much do you think that improves your margins compared to if you had to go through a smelter traditionally?
Great question. So if you're producing a typical 10 to 12% nickel sulfide concentrate and you're having to sell it to the established smelters, they typically apply a haircut of around 25% to the LME nickel price. So if the LME nickel price is, let's say, $10 a pound, you're not going to get paid $10 a pound for the nickel in your concentrate. You're going to get paid about $7.50 a pound.
Wow.
Our product, because we can sell it directly to an end customer, we would have a minimal haircut to that headline price, maybe something in the range of 2 to 4%. So instead of a haircut of $2.50 a pound, we'd be looking at a haircut of, 20 to 40 cents. So something fairly minimal.
Mm-hmm. That's great.
Now, the holy grail of the nickel business today is the production of nickel sulfate, or what's called NiSO4. This is the battery chemical to a very strict specification that actually goes in the battery of the Tesla or the Ford F-150 electric version, etc. So you need to produce nickel sulfate to a very high specification before the nickel can actually go in the battery. Now, depending on the type of ore you're starting with, whether it's a laterite ore or a sulfide ore, there are many stages of processing required. Okay, it's a long and torturous process. Oftentimes, it involves multiple transport stages between multiple different sites, and oftentimes those sites are located in multiple countries. If you talk to some of the large battery makers out there, the large Japanese and Korean battery makers, as we have, for the last few years, you quickly realize that the nickel that goes in a Tesla, for example, often has gone between 4 to 5 different countries before it's finally sitting in a car that's rolling down the streets of California or Illinois. And that gets back to that traceability issue, right? Where that Tesla owner has no idea where the nickel in that car came from. In our case, because of this uniquely advantageous style of a warowite mineralization that we have with FPX, we can produce nickel sulfate in a condensed number of stages, again, because we don't have to go through a smelter. That leads to the opportunity to develop or to produce nickel sulfate with a lower capital cost, lower operating cost, lesser transportation stages, and a lower carbon footprint. All those things are very, very important, and they're all massive strategic differentiators for us vis-a-vis other different types of nickel projects or production. Now, I mentioned earlier that we can produce nickel here based on our scoping study at a very low cost, below $3 US a pound. Just as important as where you sit on the cost curve is where you sit on the carbon curve. Okay, so one of the dirty secrets of electric vehicles is that it is a very carbon intensive process to produce these batteries, and most of that carbon intensity actually comes from the nickel production. Okay, of the overall carbon intensity of the production of a Tesla battery, about 50% of the carbon emissions associated with producing that battery are due to generating the nickel that goes into that battery. And that's because countries like Indonesia, China, and the Philippines, the nickel coming out of those countries can emit up to 69 tons of CO2 for every ton of nickel produced. We're going to be at the other end of that spectrum. We'll only produce or emit around 2.5 tons of CO2 for every ton of nickel produced. Why is that? In British Columbia and in most places in Canada, there's abundant and low-cost hydroelectric power. Hydropower is, of course, almost zero carbon footprint. And so having access to that zero carbon power to power our production facilities really rests at the heart of our ability to produce nickel with a low carbon footprint. Now, again, when we talk to battery makers, when we talk to the largest car makers in the world, this is a slide and this is a comparison that really gets their attention. Not only do we provide traceability from that safe sort of domestic source, but we can also kind of produce nickel at a sort of peer leading carbon emissions. This is very, very significant for all car makers and battery makers, and will only become more significant going forward. Okay, so if we've talked a little bit about nickel, and I tried to make the case that the world needs to be building new nickel projects going forward to meet that growing demand. The problem in nickel is that there really aren't a lot of advanced stage projects out there. There are not a lot of projects that can come along and go into production at some point this decade to meet that sort of supply gap. You know, this is a virtually comprehensive list of nickel projects that are owned by junior mining companies, typically listed in Canada or in Australia, that have advanced stage projects that can conceivably come into production this decade. Now, if we were looking at gold projects, you know, there'd be 1,000 bubbles on the screen here, right? There are a lot of people developing gold projects. The same is true of copper and lithium, but it has, not been true of nickel. And that really speaks to the very limited number of projects. There's only about a dozen or so projects on this screen. So what we've done here is we've ranked these projects on the basis of the mine life that's shown on the horizontal axis, and the operating costs on the vertical axis. And ideally, for any mining project, you'd want it to be down here in this corner. Want it to have a low cost and a long mine life. And that's exactly where our project sits. So we think in the peer group of projects, we would happily sort of take that Pepsi challenge in terms of the economics of our project and our ability to produce a large amount of nickel over a very long period of time. You know, another way to compare nickel projects is to look at this ratio of the mine life to the payback period. Okay, so this is where you take the projected mine life for these various nickel projects and you divide it by the payback period. So payback meaning, of course, how many years after initial startup will the initial capital get repaid out of cash flows? So in our case, with a 35-year mine life and a 4-year payback, our ratio is about 8.8. And you can see that really places us in a league of our own versus the peer group, which typically averages more in the range of 3 to 4. So this is a very useful way. I invite people to use this metric as a sort of a nice sort of way to compare the value of differing mining projects in nickel or otherwise going forward. Despite all this, we do trade a significant discount to the peer group. You can see we're trading this. This shows the market cap divided by project NPV for a variety of different nickel projects held by a handful of juniors and private equity groups. You can see we're currently trading with our market capitalization around 85 million US at a multiple of about 0.05 versus our after-tax NPV of 1.7 billion US. The peer group trading significantly higher than that. Obvious question is, why is that? Why is this stock so cheap against its NPV? And I think it has everything to do with the novelty of that style of mineralization, that awarenite mineralization. As I mentioned, we're the first company to have discovered a deposit like this. With that come natural questions about, the technical and economic merits of the project. I think the economic merits have been shown very clearly in the 2020 economic study. They'll be further confirmed by the preliminary feasibility study we're doing this year that will be out in September. And in terms of the technical sort of viability of the project, the recent completion of the pilot plant and our plans to further scale up that work, I think will continue to add news flow into the market that will be seen to further de-risk this project to where we could, significantly re-rate up this scale over time. And as we see, I think when projects typically get taken out, they get taken out a lot closer to a one-time multiple to their project NPV than to where we currently sit. Just briefly here on capital structure. So a couple things to mention. FPX was founded and went public in 1996. We have about 241 million shares outstanding. We've never done a rollback or consolidation of stock. So for a 26-year-old company, I think we've managed the share count quite prudently. In terms of the ownership mix, management owns just under 18% of the company, so very significant management ownership percentage. Despite the fact the company's been around for 26 years, we continue to add that to that position and have over the last few years, as you'll see from our insider filings. We have a collection of 4 high net worth individuals who hold around 30% of the stock. These are individuals both in Canada and the United States. And we recently announced the addition in our registry of a new corporate strategic investor who took a just under 10% position in the stock via private placement in the fourth quarter of last year. So we have not yet been in a position to disclose the identity of this investor. This is a large group, group with international footprint of operations. That investment really came as a result of a process of engagement that we've had with large mining companies and also with large chemical companies and battery companies and car companies. There are all kinds of large industrial groups that are interested in getting their hands on nickel and on nickel projects. We envision that at some point this year, we may well be in a position to disclose the identity of this investor. It is a very well-known group, and we believe when we are in a position to do that, that it should potentially lead to a positive response in our share price, because it will really, indicate a very strong technical validation and endorsement of the company and of the project. And so please do watch this space for that.
Yeah. So, Martin, I don't know how much you can really talk about this, but is this a situation where it would make sense at some point for this strategic investor to own the company and their portfolio, or can you not even speculate on that?
Well, what we've seen is that there are a variety of companies, both conventional companies like mining companies and non-conventional companies like car companies, who are investing in the equity of critical mineral project developers. We've seen recently in the last couple of weeks, General Motors made an announcement whereby they're investing $650 million to own equity in Lithium Americas, which is developing a lithium project in Nevada. And so that's a real game changer. We've seen Stellantis and some of the other car makers do the same. where car makers, battery makers are now investing and doing equity investments in battery metal projects. And, this is a totally new paradigm.
Yeah.
Projects like this used to be, the ultimate acquirer was always going to be a large mining company. I think it's safe to say there's no competition, and downstream consumers are going to be looking very seriously and have already started to acquire equity in these projects. Ultimately, the best way for car companies and battery companies to secure supply is to own the mines. That way they know they're going to get the metal units, but just as importantly, they can get those metal units at the cost of production. If you own the mine and you're consuming all the nickel, you're not having to pay the market price for nickel. You can pay whatever the cost of production is. And if the market price of nickel is $12 a pound, and that's what you have to pay in the market for it, might it not be better to own the mine itself and pay only $3 a pound if that's what your production costs are?
Yeah, and that makes sense to own the source. And I know that Elon Musk has talked about looking at buying lithium mines in the past and things like that. You're not, like you said, you're not exposed to any kind of major price changes, which is a really smart way to do it. But okay, sorry to interrupt you, but keep going.
Yeah, just another point here I'd make quickly. We're fully cashed up. Again, we did that financing with that new investor at a share price of 50 cents Canadian, 50 cents. We're currently trading at around 43 cents. So it's possible to go out in the market and buy the stock at a price well below what the new strategic investor paid. The other thing to bear in mind is that strategic investor, they paid a 27% premium when they came and bought the equity. So I think that's a really kind of good endorsement. We didn't have to sell it to them at a discount. In fact, they paid an almost 30% premium when they bought the stock. And to the extent we're able to disclose that, or potentially to announce further investment with other strategic investors this year, those I think will be a bit of a turning point for us, those announcements, because they will really represent the first major public significant endorsement by a large company of the technical and economic viability of our project. So we see that as a key potential turning point going forward here. We know we have that investor already. It's just a matter of sort of making it public and having the public sort of see that for themselves. Just finally here on milestones going forward, really the focus of the company is on advancing Baptiste to a preliminary feasibility study. We've got metallurgical test work ongoing, test work and market studies with third-party customers in the stainless and the EV battery supply chains to really validate our product, further life cycle assessments to validate the low carbon footprint, and really a key focus of the company's continued engagement, studies, and collaboration with the local communities to ensure that we can, establish a strong path to ultimately putting the project into the permitting phase. With respect to Van, like I said, we've made a major new discovery there. In the fullness of time, we will have follow-up drilling there to continue to expand that discovery and ultimately generate an initial mineral resource estimate there. So a lot of different paths for value creation. On the one hand, advancing a project through PFS, and on the other, really showing the upside from an exploration standpoint for the large land package that we control. And with that, I'll conclude and see if there are any questions.
Yeah. So thank you, Martin, for that. Obviously, the company is sitting on a property that has the potential to be world-class nickel deposit, and a lot of great milestones expected this year. I want to open this up for questions. If you have a question, type it into the Q&A or chat box. We'll make sure it gets answered. So going back to what you were talking about, when you talked about, auto companies wanting to know where, these metals are coming from. Talk about, if you, as much as you can, about your direct dealings with the auto companies so far, and really, what's the takeaway from these meetings? Because when you look at a company that's an $80 million market cap that has enough, silver in the ground, nickel in the ground to build a lot of batteries, it's not a huge investment for one of those companies to come in and just and take FPX Nickel out. I mean, that's the way I kind of see it.
Yeah, it's an interesting question. I always say that our engagement with car companies and battery companies is the sort of the most interesting part of my job. And it, as a small company, listen, this is a micro cap company. For us to have meaningful engagement with some of the largest car companies and battery companies in the world on a very regular basis is pretty cool. There rarely is a week go by where we don't have another touch point meeting or update meeting with one of those many groups that are out there, and they're all very focused on trying to figure out how they're going to secure nickel and these other battery metals. You step back for a second and you think, okay, you're an automaker, you're an incumbent large automaker, and you need to now transition to becoming an EV producer. I think the success or the failure of that transition will hinge entirely on their ability to access and source raw materials. Because if you can't source the nickel and the cobalt and the graphite and the lithium, you can't make batteries. And if you can't make batteries, you can't make cars. And if you can't make cars, you're not a car maker anymore. It's as simple as that. It's an existential threat. And that existential threat, the root question there is the ability to source raw materials. So when we first started talking to these groups, about just over maybe 2 years ago or so, they're very much in learning mode, trying to figure out this business. This is not like procuring widgets, right? You can't just call up China and say, give me a bunch of dashboards. And it's not a just-in-time philosophy. There's no just-in-time, version of the mining industry. These are long lead, projects that take several years to bring into production. So a lot of that initial period was just kind of them getting into learning mode. And some of them, frankly, are still in learning mode. Others like Tesla and some of the others that have been more public with investments more recently are getting ahead of the curve. Tesla's long been ahead of the curve, and now the others are sort of playing catch up. And where Tesla has largely succeeded is they've been able to secure offtake agreements, oftentimes without having to make any upfront investment. So junior mining companies have been happy to give offtake away to Tesla for nothing, just for the ability to associate their name with Tesla. We think that that's a huge strategic blunder on the part of the mining companies. Why would you give away offtake for free? And what we're now starting to see is that is changing. And those car companies and those battery companies are now virtually across the board. They're recognizing that they need to make upfront investments to secure offtake. So the table stakes to get, access to future nickel supply is they're going to be writing checks into the equity, and they're going to be making prepayments against future nickel deliveries or lithium or cobalt deliveries. So it's been a fascinating thing sitting in our chair, watching that learning happen over time and watching them really realize that they're going to have to provide capital upstream to companies like ours. And that puts us in a great position. Ultimately, we're going to have more sources of capital that lowers our cost of capital. And that should be very good for our share price going forward.
Yeah, absolutely. And then obviously we talk about critical minerals, the importance that the U.S. and Canadian governments are putting on critical minerals, for the reason you spoke about earlier, where most of them are coming from China and Russia, will obviously become less reliant on those countries. What discussions have you had with the governments of the U.S. and Canada? And, obviously, because this is such an important project, is there any way to maybe fast track permitting? Like what are the type of, or get certain tax breaks or grants? Like what kind of response are you getting from the governments that you've spoken with?
Yeah, it's a great question. That's another new part of our job around here as a company is learning the ropes of government, which we've been doing over the course of the last year. So starting with the United States, so the U.S. Department of Defense, under something called the Defense Production Act, and Title III of that act, the DoD actually has around $1 billion or so that they have said that they will allocate to co-funding feasibility studies on advanced stage battery metals projects that are located in the United States, but also those that are located in Canada. So Canada is actually considered a domestic source of supply with respect to that DPA or Defense Production Act funding. So we have, had interactions with the DoD. We've been invited to submit an expression of interest for that funding. We will do that. We will, pursue that opportunity, and we'll see if that's something that comes to pass. But it could potentially be a very significant source of funding. The DoD has a lot of money to play with there. And frankly, not a lot of projects at the feasibility stage in Canada and the United States to deploy that money on. The Inflation Reduction Act that was passed in the United States last August by the Biden administration has really caused the Canadian government to step up its game in terms of the funding opportunities that are available to projects as well. We've had very, very strong engagement with the federal government of Canada over the last 6 months in that regard. I'm a little bit restricted as to what we could say right now. I would just say watch this space, and we hope to be in a position to potentially unlock some non-dilutive, non-repayable funding from the government here as part of their critical mineral strategy in Canada. Again, that's potentially free money for us, non-dilutive money, and that would be great. And again, a great technical validation for the project if it does come to fruition. So please do watch this space. With respect to permitting, we know that the main impediment to building new mines in Canada, the United States, runs through the permitting regime. The regime in Canada, I would suggest, is actually more certain. There's a more certain, and shorter timelines for permitting of projects in Canada than the United States, but it's by no means a quick process. There's been a lot of talk in Canada about wanting to accelerate that for critical minerals projects. Really, we're fairly conservative in our view about that. We think ultimately these projects run through, the relationship that the company has with local communities. That's our big focus. We won't rely on the federal government to try to accelerate that. If we were building a mine in your backyard, you'd want to be consulted and engaged with, and it would probably take some time for you to want to approve that. We recognize that, and for us, that really runs through the heart of our partnership and our relationship with First Nations that are affected by our project. So we'd love to see the federal government sort of accelerate that. I won't hold my breath, and we'll just continue to keep our heads down and doing the right thing by our local partners.
Yeah, so obviously the PFS is going to be a big milestone for the company, and that's coming up this year. How has the PFS changed from the PEA, in your opinion? What do you think that the major changes will be, and what do you think the CapEx will be for a project like this?
Yeah, so this is a big CapEx project. The 2020 PEA envisioned CapEx around US 1.7 billion. So this really is a major company scale project where we make no bones about that. And inevitably, for a project study that was done in 2020, we've all seen what inflation and escalation has done in our own lives and for all businesses. So we do envision a significant increase in the CapEx. There's just no way of getting around that. However, in keeping with that, we've seen greater efficiencies as well in technical aspects of the project. So we're envisioning a higher feed of nickel to the mill based on the updated mineral resource estimate that I mentioned earlier. And we also envision higher recoveries. And what goes along with inflation on the cost side, we also envision using a higher nickel price. The nickel price today is around $12 a pound. The 2020 study was based on a nickel price of below $8 a pound. We probably will use for this upcoming study nickel price in that $8 to $9 a pound range, so well below today's spot price. But that increase in nickel price vis-a-vis the previous study means that we can still aim for the same type of NPV that we had in that previous study, which in today's inflationary environment, I think is going to be seen very positively by the market.
Absolutely. And you obviously mentioned the cash position. What milestones do you think you can reach with your current working capital, and when do you see the need to potentially have to raise more funds?
Yeah, so we're fully funded out to mid-2024. We don't see any need to raise money at all in 2023. The main milestones will be, increased demonstration of the metallurgical flow sheet confidence, production of nickel sulfate on a test basis for that battery market, confirmation of the low carbon footprint of production. Ultimately, all of that's going to feed into the PFS, which we expect in September. Again, potential news are engagement with government. So watch the space in that regard. And, with the introduction of the new strategic investor last year, we've continued to see other parties sort of step forward of a strategic nature looking at the project. No telling how those discussions would go, but we're continuing to see a lot of interest from the project from a lot of different, both conventional and unconventional sources. So nothing that we can point to specific timing on there, but that's an important sort of potential catalyst that could sit out there as a very, very significant catalyst, in addition to potentially kind of being able to reveal the identity of the existing strategic investor.
Yeah. So when you talk about obviously the large capex, most likely a bigger company is going to come in and take it, take the company over and build the mine. But my question is, what do you think is the tipping point? Like, where do you think, what milestone do you think you need to reach in order to, have a bigger company say, hey, it's time for us to step in? Because I feel like you're getting kind of close to that point with the feasibility study and all the testing you're doing at the the pilot testing work at for Baptiste.
Yeah, it's a great question. I mean, I think there's what we can do with the project to de-risk it, to get it to that point. Frankly, I think with the completion of the pilot plant and all the background work that we're doing on the pre-feasibility study, the project is already actually at that stage, or very close to that stage, in terms of technical de-risking that would make it sort of pass those technical hurdles, if any even remain at all. Really, what I think, what the bigger consideration as to timing of a potential takeout is entirely less to do with what we do with the project and more to do with market conditions. You haven't seen major mining companies, the Western mining companies, build a new nickel mine since about 2012 or so. Okay, so we're getting on 10 plus years now since a major Western mining company built a new nickel operation of any significant size. And so at some point, that squeeze in nickel supply will mean that the nickel price will stay at an elevated level for a long enough period of time that those major companies say, okay, they look around, they say, we don't have projects of our own. We need to start acquiring them from juniors. And I anticipate that over the next sort of 12 to 18 months, you're going to start to see that M&A cycle kick off, where the nickel price will have been high enough for long enough. The majors will have had enough profitability, and they'll feel that they have appropriate cover to go out and start acquiring these projects. And I think we're going to factor into that.
Yeah, we have a viewer is asking if you can go back to that slide with the pie chart of stock ownership. Just wanted to get another idea of, so management owns 17%. For your institution, any institutions that our viewers would know?
We have had some institutional owners of some prominence over the last couple of years, but a lot of that has gone away through the sort of the choppiness of the market, particularly in 2020, in the latter part of 2021 into 2022. So really the bulk of this slice here really is retail.
Yeah.
And a big part of the story, I think, going forward is really institutionalizing the shareholder base, or or making sure that institutions own a larger slice of this going forward as we continue to increase liquidity and market cap.
And what was the reason why the corporate strategic investor is trying to remain nameless through this transaction?
Yeah, it's a good question. They're a public company, and they want to manage these types of investments in their own communications with their shareholders on their own timelines.
Yep.
And so it's our hope that they're in a position to want to be public with this and other and this sort of strategy of investing in nickel companies at some point this year. And that's about all I can kind of say without leaving too many breadcrumb trails.
Gotcha. Nope, that makes sense. And I don't mean to put you on the spot, but I think we're gonna leave it there. I want to thank Martine Turenne for coming on and getting our group up to speed on FPX Nickel. Obviously, the right time to be looking at the company, a discount to its peers. The demand for nickel obviously will be robust for the future here as we start to electrify more electric vehicles and things like that. And then, of course, a lot of expected milestone announcements coming up in 2023. Before we wrap it up, Martine, do you have any parting words for our viewers?
Just again, to thank everyone for their attention. I'm always happy to talk to people directly. So if you have any questions, you can email me at CEO@fpxnickel.com. That's CEO@fpxnickel.com. that goes directly to my personal inbox, and I'm always happy to reply to questions and inquiries from shareholders or from potential shareholders.
Yeah, absolutely. So feel free to reach out to Martin. I'll make sure that everybody has your email address when I send out the feedback link. In the meantime, you can get additional information on FPX Nickel at the company's comprehensive website, fpxnickel.com, including details on the company's current project, as well as latest press releases. And like Martin said, we will, obviously keep an eye out on the nickel space, but we will definitely keep you posted on any news that comes up here in 2023.